Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that pullback that we did say was expected on the Bitcoin chart. And now we're getting into some critical areas where, if we don't hold this, then I would be expecting some more downside, probably to 25,300, maybe a little bit of a stop at 26,100-ish prior to that. But we are at this critical level where, of course, we filled the liquidity. We grabbed the liquidity that we had just built up over here on that massive pop-up. One thing to consider is that on the 6 hour, we are underneath the Bollinger Bands, midline there. So we are just going to have to pay attention for a little bit of potential, sideways or down continuation, which is not very secure right here. And also, we are toying again with the neckline of that head and shoulders. So guys, we really don't want to push below this level if we're going to stay above the neckline of that head and shoulders, which has really just been hanging over our head like a guillotine for quite some time now as we chop sideways. Now, a lot of people think that, these type of patterns have to play out right away. No, that's not the case. They don't have to play out right away. They can go sideways, okay? It's just like consolidation as the market decides what to do with these levels. And as long as we were above here, this kind of gray area around 27.8, 28K, then, we were pretty chill. We were just in the middle of this structure. But coming back down to the neckline, that is where things get a little bit dicey. And so when I suggest that we could drop to the next support at 25.3-ish, that's where, of course, we have this support from over here. But then the measured move is actually lower, around 23 to 22,000. So again, we don't want to mess around with this structure until we put some nice new patterns in place, some nice new structure in play. Then this is just going to be hanging over our heads. However, as long as we hold this level and above, then we're still going to be targeting that area of 32 to 33,000, which could quickly get us up to the 35 area should we be able to hold that. Of course, this market is just going sideways. It is the boring times of the markets. We've had the majority of that early, stage one kind of bull market push, and now it's just the calm before either a storm or a tsunami to the upside. We'll find out, okay? So just keep your hats on there, guys. Other than that, you can see that we were talking about the good old alpha origin channels. We did come up to retest the bloodline. I said if we did get rejected there and that we didn't flip it, then I would take that as a little bit of a bearish signal, but only if we broke below this green line underneath it, which really has not been broken yet, okay? And so we're still on solid ground, but at least by my bloodline theory, if we do break that green level from these alpha origin channels, then the next level would be around 22 700-ish, okay? So that's where my bloodline would have us dropping down to, if not maybe as low as 21,000, but it looks like we're pretty solid over here. If we go ahead and put on the fib channel, you can see that we're pushing down on the fib channel again. And maybe it really does want to test the bottom, just a little scary wick there to 26,300. And then maybe bounce back up, or who knows, just continue to break down. This thing doesn't have to do what I want it to do. It can do whatever the buyers and sellers want it to do, right? I'm not the one controlling this chart. You guys are. You're the ones deciding whether you want to buy Bitcoin or sell Bitcoin. I'm just telling you what the key levels are, guys, where we can expect reactions. Let's see, if we do take a look at our wedge, you can see that overall it's still fairly positive on the wedge, okay? I know a lot of people have been talking about various wedges, but they really don't flesh it out the way that I do. You can see that I have the CME gap here, which of course was filled. We made sure to keep it filled, and then of course we're just kind of back testing that massive pump up here, which is totally cool. We do that all the time. You know, 1, 2, 3, right? You can count this one too. 1, 2, 3, 4, 5, right? We just chop this one out 5 or 6 times, and then 1, 2, 3, 4, 5, 6, 7, 8, right? We fleshed this one out like 8 times. So far, we've only done 1, 2, right? And so if we have a couple more chops in this area to go sideways or to build up, some type of structure, right? Some type of kind of liquidity mass, right? You see how big this thing is. You see how big this thing is, right? You see how big this is. How big this is. How big this is. This is just a tiny little thing, right? You gotta give it a little bit of time to build some liquidity mass, for time for the market to negotiate itself, and then we get the move, right? So again, like it's usually not just this little kind of like pinprick up, pinprick down, and then game over, man, right? We usually have a little bit more time to think about things. Now, the worrying thing, of course, is that we are towards the end of the month. It's the last day of the month, and so the bulls and the bears are going to be chasing each other for maximum pain on the chart, right? As this month closes, and so there may be a little bit of a pushing back and forth there, but overall I would say we're still holding on to this level, which has been pretty good support. And should we be able to launch off of that eventually, whenever we build in enough structure there, then I would expect us to get up to that 29. And then should we break out of that again after puncturing these holes over here, then we could talk about that 32 just from a horizontals perspective. Guys, we are on the 6 hour right now, but again, like if we take a look at that wedge, you can see that if we played around with this little middle part of the wedge, that's not that's also not that bearish, right? Like we've had good support in the middle of this, I don't know what to call it, kind of like a mid channel of the wedge, right? And so even if we had a little bit more of a scare, 26.2, 26.150, that could be a total fake out before it just comes back out to break out. Just a return to the mid channel and then a pump, right? What you don't want to do is lose 26,000. You lose 26,000, you're probably coming to the bottom of this, and then you're gonna have to put in a bunch of structure here, and that could easily break down. Okay, so again, I'm trying to give you a little bit of an advanced view on this wedge that people are using, and of course, it's really popular to use these visual aids, and for good reason. You can see what's going on, but let's just put a little bit of a skeleton in there to complement this outer wedge there, and then you can see what's really going on is we're in the bullish side of it. Okay, this is the bearish side of it, and this is just like no man's land, right? All right, let's see. Let's jump over to the daily chart, because on the daily chart, I do have some new levels that we should be paying attention to this afternoon after that drop that we had. Now, the cool thing about what happened on the daily is that we did have this massive liquidity over here just from that kind of giga pump, to the skies that we had the other day, and we've reclaimed the entire thing. So normally that's a bad thing. All right. Normally that's a bad thing. You don't want to reclaim more than 50% of the candle. You reclaim more than like 80% of the candle, and you're back to where you started, right? It's just kind of a bearish thing. It's like, oh, well, if you just average all this price action, then we're really just, downtrending, right? And if we get into here, then we basically have a distribution wedge to the downside. So holding this area now becomes pretty critical. And if you can see my key levels for the day, we've got like 6 hours left, 6.5 hours left on the day. And what we'd really like to do is close above 26,991. So, are we in that neighborhood? Yeah, we're in that neighborhood, but just because of the way that bots and algorithms, not necessarily human beings anymore, are trading, we really want to be above that type of a volatility pivot. Otherwise, the bots are just going to lean bearish, right? And if we're above that volatility pivot, then they're going to lean bullish. And so if there's any random volatility, any random news, any chaos in the markets, then we could get a pump back to the upside as long as we're above 26,991. Now, you know me, guys. If you've been following this channel for a while, you know I prefer to be above the momentum pool and above the volatility pivot, both of them in order to take plays to the upside. But in this case, you know, we're just really looking to hang on to the volatility pivot because otherwise, if you just consider where we are right now, we're actually below the momentum pool and we're below the volatility pivot just by a whisker, okay? Just by a whisker. And so, you know, flip your thinking upside down. If we close underneath there, well, there's an easy chance that we can just drop down, potentially even to the bearish control zone at 25,810 on a daily basis. Although, of course, we do have this nice chunky support that we've been building up down here. So, you know, it could be a little bit of a fight. It could be a little bit of fake out too, right? We saw that with the wedge and some of these other structures that we were looking at previously. You can rewind. Guys, we would like to reclaim the neutral point of control here at 27,415 in order to give us the best shot at putting the bulls back into control. Right now, the bears are leading on the day. You know that because we're underneath the neutral point of control, which is why I kindly mark that out for you guys so you can know that the bears are in control right now. No reason to be super bullish because the bears are in control, and you can also see that being below the volatility pivot. Bulls don't have firm control, like absolute dominance of the chart unless we're above 28.8. And bears, likewise, they don't have dominance unless we're under 25.8. So again, we're just playing in the middle. And you can just consider this just a big old chop sideways as we consolidate, building up for whatever our next move is. Now, we are hanging out and kind of rounding the Bollinger Band's midline up. And so I do like this position on the day, as long as we just kind of hold, you know, just kind of circle around the Bollinger Bands and slowly start to carve it to the upside, then there's a greater chance in my mind that we're going to pop up. Okay, so this price action being up here, as opposed to all this price action being underneath the Bollinger Band midline, you know, we just had a lot of price action underneath it. It could have easily tipped over. Getting that price action back above it is going to start curling things to the upside. And since, you know, nothing goes in a straight line, it all kind of just is a bunch of sine waves, just kind of, you know, going in and out, circling around lines. Then, of course, it's okay to dip our toes underneath there. We just want to get back up here and start carving out that area again, you know, really bending that line up. And so that's what we're looking for here. That's why I say don't be a perma bear, don't be a perma bull, just be a clever little alpha monkey, okay, guys? And again, like if we start to lose some critical areas, again, on a closing basis, not intraday, but on a closing basis, then of course, you know, you don't have to be loyal to your positions, okay? Sometimes it's okay to just, you know, take a loss, right? Because again, like if we close under here, then on a daily basis, it's just much more likely that we close to the downside. Not financial advice, that's just my strategy. And likewise, if we were up here above the momentum pool, above the daily pivot, then of course it would be much more likely that we're going to continue to the upside. But again, you guys can decide how to manage your own risk. I'm not here to hold your hand, just here to be a friendly guide along your journey. So that's the daily, guys. Really, again, we're just trying to recapture that neutral point of control, 27.4. Things are going to look really good should we get above 27.7. And you know what we really want to hold on to, which we just popped back above it, which is great, is 26,991. We're currently 26,998. So again, like these key levels, again, I'm not fooling around with you guys. It's good stuff. And look where we bounced off here, right on my horizontal support, that gray line in the background. So, you know, nothing to really worry about unless we close in that area. Then I'm just going to be a little bit dicey, a little bit rich for my blood. Let's go over to the 2-day. Now, the 2-day doesn't close today. We've got another day and 7 hours. But just want to put some context there because the volatility pivot for the 2-day is a little bit higher than the daily. So on the daily, we're right at the volatility pivot, but on the pardon me, that's the 2 week. But on the 2 day, we do have this lower pivot. Actually, it's not higher; it's lower. The 2 day is actually at 26,750. And let me just flip to the 5 day really quick. Yeah, the 5 day is the one that was higher. Okay, good. So the 2 day is actually at our back. So for the next day and 7 hours, the reason why I want to show this 2 day is because this is going to be how we define our buffer room, right? So even though on a daily basis, we're currently at our volatility pivot, let's just say that we fail today, then we have this backup volatility pivot on the 2 day, which is at 26,750. Therefore, I really, I'm not too concerned unless we're under 26,750. Now, if we go to the daily, that's 26,990, right? 991. But on the 2 day, we have a little bit more room, 26,750. And so some people could get faked out by that. Maybe this little wick is kind of faking out people already. But again, the momentum pool is up in the air, and so even just hanging out in that area is risky because we're underneath the momentum pool. We've lost a ton of momentum that we had going to the upside there in this pump, and we don't want to be closing the 2 day. The 2 day is twice as powerful as the daily underneath 26,750. But on the other hand, if we hold above 26,750, then it's also twice as secure. So again, I'm just not freaking out. I'm just seeing this as sideways action, okay? And for the 2 day, again, closing tomorrow, we're going to want to be above 27,430. And again, 27,700 is a really bullish level should we be able to get above that one. Let's go ahead and put on the 5 day because this is the one that I was concerned about. So the 5 day, and I think this holds true for the 3 day also. And but let's just use the 5 day because it's a more powerful time frame. But for the 5 day, we can really see that the number that we need to beat is 29,776, and that's going to close in 4.5 days basically. So, we have some time. We have 4 days to get up to that 29,000, that $30,000 level. But we definitely have our work cut out for us. So one thing that we're going to want to see pretty soon within the next couple days, again, that's why I was pointing out the 2 day, is that it doesn't matter what happens today. Tomorrow is going to be pretty decisive on whether we're going to get thunked for the next few days or whether we're going to get boosted. And so if the 2 day closes bullishly, then we're going to be on the right side of this. Probably we're going to be tracking up. Maybe could even take out the alpha momentum pool on the 5 day chart. And if the 2 day closes bearishly, then we're going to be putting the neutral point of control at 25.8 potentially at risk on the 5 day. And that could cause this chart just to drop down considerably on the 5 day closing basis at the end of the week to maybe even 21,000 as low as. So we really don't want to be in that kind of a situation. And again, if you're a bull, then you want to see the 2 day closing positive above its volatility pivot, and for us to get our toes into this 5 day momentum pool. If we're in that 5 day momentum pool, we're probably fairly secure on these shorter day time bases. But again, we're really going to want to be above 28,220. The number I've been throwing at you guys is 28,300 for the last few weeks. And here we see a very clear number of 28,220. But for general continuation, the MACD is saying 28,770. So again, in that area would be decent. And above 29,422, bulls are going to be in control. But again, we just don't grab that volatility pivot unless we're above 29,776 in 4 days, 7 hours. That's where you want to be to get those Giga Chad pumps to the upside. So we have some time, but again, the daily is working sideways right now, and the 2-day I believe will be pivotal, and then the 5-day will kind of choose our destiny. Now, if we go over to the 2-week is a little bit more generous than the 5-day, and it will be closing. Let's see, in the same time frame, actually, 4 days and 7 hours. So that's why I think it's a great pair with this 5-day. Obviously, the weekly is going to be just something in between, but being a little bit more generous, you can see that on a 2-week basis, which again is how I think this market is moving. Even if we have a dip on the 5-day and the 5-day kind of loses ground and dips down, you can see that we're actually going to be inside the momentum pool of the 2-week. And so on the 2-week basis, which I believe like this entire market has been moving off of since the bottom, we're still going to be pretty snug and secure as long as we don't get below this $24,400 level, 24,500. We kind of want to be above that, and preferably above 25,824. So again, like some of these smaller days, the 2-day, the 5-day, so smaller than week, like some of these charts may end up dipping. I just want to say, don't panic yet. Okay, don't panic yet. As long as we get above and hold 25,824, then we can wick, we can skydive, we could do whatever. As long as we get back above there, we're still cool on the 2-week chart, which has really been driving this market. And then, maybe do a little bit more sideways, and then this volatility pivot will probably come down in the next session. And so again, like as long as we get above that 29,000, that $30,000 area, then we have a good chance for some type of a pump, maybe even up to that $35,000 area. So on a 2-week basis, again, I really think these levels are important to have on your chart. The 2-week has been really, really important just throughout this entire run. And if you've just been following my 2-week analyses, you probably would have been in great money, okay? But 24,500, 24,400, it's a kind of little zone. We don't want to lose that. We want to stay above, preferably 25,824. We're in good shape above 26,753, which we are currently above right now. So we're actually in good shape on the 2-week. But we're just not going to get that push on volatility unless we're above 28,780. So that's kind of like our stretch goal, right? Doesn't really matter if we get that one right away or not, as long as we're above the momentum pool or inside of the momentum pool. That's the cool thing about the momentum pool. It's just kind of like your buffer zone, right? But again, like we're not really going to see what we want to see unless we get above 29,000. Guys, let's jump over to the monthly because we are having a monthly close. And you can see that, we're underneath the Bollinger Band's midline here for the monthly. And if we just look back, you can see the bull runs have typically been above the Bollinger Band midline for the monthly. Now you guys know why I'm using the Bollinger Band midline, right? Look at the logic here. Get on top of it, you can have a nice run, right? You get below it and you can dump pretty hard, okay? So are we getting rejected from it right now, or are we going to get accepted? We're right there, right? Like we're right in that area where we can potentially decide what's going on, where institutions are going to decide to get in on this or to just flush it down and run it down again. But again, should we get above that and hold it, then it could be a very interesting time, okay, for this market. Should we be able to get above that monthly Bollinger Bands midline? And again, like that's also why it's very risky to be buying here. Okay, it's very risky to be buying here, and people telling the uncertainty in the market is fair because we wanted to buy down here at this double bottom, right? When we flipped the monthly volatility pivot basically down here, and rode it up to the Bollinger Band's midline, you don't really want to be buying it where you could potentially be rejected. Okay, even if you believe we're going to enter a bull market, this could still go down. Okay, it's like just like over here, you see this. It had its first initial run, which is kind of what we did, and then what happened? It just kind of tracked down for 1, 2, 3, 4, 5, 6, 7, 8, 9 months to the downside. Okay, overall, right? I mean, there are obviously ups and downs, but 9 months to the downside. And so, what are we in? We're in month one, right? Month one. So, perhaps we could get above the Bollinger Band's midline, maybe even up to this bullish control zone, right? Here we have it at 45,000. Okay, that's where our bullish control zone is on the monthly. Should we be able to break through? I think that, yeah, I mean, yeah, we could get up to like 42, 40, 42, maybe even 50,000 with some exuberance in the market. But, historically speaking, we might turn around at that point and then go 9 months sideways or down. Okay. And we could even come back down underneath the Bollinger Bands, just like we did over here during the virus era. Might want to not count that wick, or maybe you should count it. Maybe we're going to do that again. But, we basically came back down to the Bollinger Bands midline, and then we took off again. Okay, so if we're entering in a new bull market, which it's very possible that we are, then I would expect this Bollinger Bands to allow us to break through it possibly, but to continue to go down as then we have a half a year of boringness maybe. Then everything gets reset after this massive push. Everything needs to get reset, and then we do another massive push. Okay, and then maybe even that's the real thing. Okay, so that's what I'm looking at, and I think that pretty much aligns with the halving and all that good stuff on Bitcoin. So I'm not a big guy on the halving. I don't really follow that stuff. I know it definitely matters. It's just not my specialty. And I just like to trade the chart that's in front of me there. I'm not really looking that far into the future. I mean, obviously, I'm one of the few guys who actually does look that far in the future using a variety of different methods, but I'm not counting on it. You know what I mean? And so I don't know what's going to happen in the world. I don't care what's going to happen. I just want to know what are we looking at right now. And right now, although we can hypothesize anything about the bigger market, right now, just realistically speaking, our neutral point of control on the monthly is 27,833. Bulls are going to have the advantage above 27,833. We are currently underneath that. I keep telling you, we need to get above like that 28,000 area, right? We need to get out of that 30,000 area. And look, where's our cold current momentum? 29,250. Okay, like we need to get above. We need to be in the upper half of the momentum pool. We don't want to be in the bottom half of the momentum pool. If we break under 26,285, there's a chance that we're going to drop down to support here at the 24,500-ish. Again, on the monthly basis. It could take months for this to play out. And then if we lose 24,550, then potentially we could drop all the way down to the volatility pivot at 16,000. I would not expect us to break that. I would expect us to basically double bottom, okay, under the current conditions. That's what I would expect. If we do break that, probably we're going to have resistance in that area, first of all. Okay, or pardon me, support. I should say support. Just resistance to breaking down is what I meant. And I just think that we can play it by ear at that time, depending on what's going on with the macro. But yeah, our real goal is just 27,833. Now we're not going to get that most likely at the end of the day today, and so we're going to have to update the monthly, a little bit later tomorrow maybe, and this month was basically just a closure in the momentum pool. Again, it's just neutral sideways action. Totally nothing to feel bad about. Nothing to feel good about, nothing to feel bad about. It's just sideways action. Okay, and but again, being underneath the momentum pool, that's where it kind of starts to suck. And it's terrible if you're underneath the volatility pivot and the momentum pool. That's why that would be so dangerous to break. That would break this entire chart. Okay, maybe that's going to rise. In fact, I suspect it will rise in the next month, and it might be a bit higher, which would actually suggest good things for us, that we're not going to have the potential to fall as low as 16,000, but maybe higher. You know, maybe we can catch ourselves higher even if we explore all the way down to there. But again, like, it just, as long as we're below 29,250, this chart's not going to do anything. And you can say, yeah, we pumped all the way up to 31,000. Don't we have to be above 31,000? No, 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 no. For this trading strategy to work, all you need to do is be above 29,250, above the volatility pivot, above the momentum pool, likely to continue up to as high as 45,000. Again, on a monthly basis. It could take 9 months for some of this stuff to play out, right? Whether to the upside or to the downside. It just takes months and months and months for these monthly charts to play out. Okay, but you see all of that awesome price action that comes with it if we're able to flip the Bollinger Bands to the upside and then get the bullish control zone. Holy moly, that's going to be amazing, right? Rejected from the Bollinger Bands midline. Ooh, that could be scary. Okay. Just stuck in the alpha momentum pool? No issue. We're just kind of chilling. It's kind of chilling, kind of just negotiating with the market. All right, guys. I think that we could do perhaps just a quick look at our EMAs. And then let's also take a look at our volatility on the day. Let me get rid of these boxes here. The day is a very short time period, right? But currently we're underneath the 4, underneath the 21, underneath the 9. So that's a bearish, bearish, bearish. We're being held up by the 20 SMA, not the 20 EMA, but the 20 SMA. And so that's pretty good. We're also starting to come back to the the 10 SMA there. So again, like, holding this area, not too bad. We have the 200 and the 300 down here around 25.3. So on an EMA's basis, the day, it has support. This is just chopping sideways right here. Not great, but could be a buying opportunity. We're already getting a little bit of a bounce, so we'll see. As for our indications, you can see we're just having a little bit of a volatility flip here. I would expect for this to continue to push up, okay, at least to the 50%. If we don't get at least to the 50%, it could be doing a reset and then starts to push up, and this could have been just like a massive fake out, and that would really suck. It can happen sometimes, okay? It can happen. But I'm not going to call that as a fake out unless these cross, and they haven't crossed yet. So again, like, it could just continue to expand or do whatever it wants to do to the upside after having reached this critical low. And I would still suggest that we have the opportunity to push to the upside pretty hard, in fact. Just a little bit of negotiation going on right now. If it crosses, then we'll have to rethink it. Let's go to the 2-day. The 2-day is losing the 300. That's not good. We kind of wanted to hold that, but we do have the 200 and the 50 below there. We're getting a nice bounce off of the 50 EMA and 50 SMA, so not too bad. Okay, we've got support below us, but we are underneath the 20 and the 9, so again, it's just not great. But, considering that we move in waves, we don't move in straight lines, we could easily just wave back up here. So again, I'm just not too bearish on this, just sideways. And here you can see that the 2-day is still resetting. We need to see something like this. And so the 2-day is just saying it needs more time. The 1-day was kind of jumping the gun, and the 2-day just wants to continue to go sideways or do whatever it's doing. It's consolidating. This is a consolidating posture. And so the 2-day it's not ready yet. That's all I can say. It's not ready. If we go to the 5-day, 5-day does have some breach of the 200 here. I just don't like that. We are potentially having support off of that 89 and the 20 over here. It's a little bit difficult on this one. Yeah, I mean, we have the potential to squeeze to the downside on this. And I'll just make this a little bit more clear. Here's the 9 EMA, and here's the 20 EMA, and you can see we're filling up between them. But this squeeze would be one to the downside. Okay, so yeah, we just don't want to breach that 26.6 area. This could easily be a squeeze to the downside. And again, we have a lot of liquidity to try to grab over here. Gonna have to pay attention to this 5-day. Again, I told you, like, the 5-day is gonna choose our destiny, right? You can rewind to the 5-day part of the analysis, and again, I said the 5-day is gonna choose our destiny, and yeah, I mean, this could easily pop back up and squeeze to the upside. It could easily pop back down and squeeze to the downside. This one is very dangerous, the 5-day, okay? 5-day will control us. I think the 2-week overall is kind of like the master structure we're working on, but the current 5-day is, the 5-day bears and the 5-day bulls, like, they are in maximum war posturing, okay, guys? And if we look at the 5-day, whew boy, yeah. So we've already maxed out on low volatility, and we're kind of just continuing that. And whenever we got a surge in this one back up to the upside, you can see these beautiful arcs on the 5-day, okay? Like, these are major moves, guys. And right now it's being dragged out. But when this thing starts to expand, whether we're pointed up or whether we're pointed down, it's going to be a major move. It's not going to be anything to sneeze at. It's going to be very defining on our chart. So the 5-day is basically our master, okay? And it could take 1 or 2 5-day sessions. So it could take a week, it could take a week and a half. And we do have a little bit of bullish divergence over here. It's already played out, but it could be supportive, okay? It could be indicative of something good. Just, it's not very clear now. And our Stokes are pointed to the downside, so just gonna have to pay attention to that. Let's go ahead and go over to that 2-week. Don't like this. This is all right. Questionable. Just like a very long-term contraction. Nice pump, contraction, nice pump, but we're going back into contracting mode. So yeah, I mean, maybe that run to the upside is over. We're having a nice clean close on this, and if this, this one is still pointed up here, and so that could drag the bottom one back up, and we could continue to expand to the upside. But if this thing starts curving down, while this one is curving down, then I would expect we're just going to go back into contraction mode on this chart. And so the 2-week, it's waiting for the 5-day to decide, and then it's going to build its master plan, and it's just going to take a while. It's just going to take a while. But currently, above the 200s, above the 20s, above the 9 and 10, above the 89, below the 4. That's not good, but overall bullish. And if we could just get back above, oh well, we're almost there, almost there. If we could just get back above that 27,000-ish, it's going to look a lot better. So, we're there. It's just really 27,250-ish on an EMA basis. Just, we don't want to be squeezing to the downside here, which this could potentially be a 435 squeeze to the downside, but it looks okay right now. Just the next candle will really determine things. So again, 4 days to go left on the 2-week. Let's go over to the monthly. The monthly did a check back to the 9, no problem there. It is below the 20, which isn't great, but that's okay. We could be getting a squeeze like this, just coming back up. We could even come back down, go back up, come back down, and then pop up, right? And then maybe we get pushed down by this one. And then maybe we go again. As these maybe kind of come around and scoop us up. Yeah, I could easily see us playing that out, assuming that we don't lose, that 26,000-ish area, and definitely not 25.5. Otherwise, we're going to be squeezing to the downside. Sorry, TradingView doesn't draw a line straight. I draw a line straight, but TradingView doesn't. And our volatility here, so we've actually been contracting to the upside. It's not really a strong push in my mind, but this thing isn't done yet. This thing hasn't closed off. We'll get an idea. If this thing starts to pinch shut on the close of today, then we'll get an idea of what's going on. But so far, it's still contracting as we're moving overall to the upside ever since basically last December. And so this thing doesn't look done yet. You see maxed out up here, contracted down, expanded to the downside, and then contracted to the upside. Not finished yet. The close of this month will give us a much better idea. Do we get a little kink like this and then it closes off, or do we continue to broaden? That will be the determining factor. Alrighty, I think I'm going to end it there. Those are alpha for the day. Stay safe and happy trading.